Marty Speaks, where all hustlers, young and old, come get the knowledge they need to dominate their day. I'm your host, Marty. This is episode 4, Different Types of Stocks to Invest in the Stock Market, part 1. Now, I know you're wondering, what do you mean different types of stocks? Aren't they all the same? I just throw money at a company and call it a day, don't I? No. You try to implement different types of investment strategies when it comes to the stock market. And with those different types of investment strategies comes different types of stocks to implement into those strategies. So I say part 1 because there are plenty of different types of stocks in this reasoning, so that's why I don't really just want to hammer them down your throat in one episode. So today we're going to be going over 4 different types of stocks. We're going to be going over the blue chip stock, the value stock, growth stock, and the income stock. So we're just going to hammer right in. We're going to start off with the blue chip stock. Now, blue chips are considered some of the most prestigious, well-established companies that are publicly traded. Now, these companies have a credit-worthy reputation, have constant growth rates, reliable earnings, steady dividends. These are companies that really attract a buy and hold type of investors. These are companies that are the leader in their packs. They are large capitalization companies, so the Facebooks, the Alibabas, the Googles, the Amazons, true household names in the stock market. Those are usually the blue chip stocks. Now, they call it a blue chip stock because in a poker table, a blue chip is considered the highest of value. So blue chip stock in the stock market is considered the highest of value. I truly recommend these stocks if you want to go for a buy and hold type of strategy. So with that said, we're going to move on to value stocks. Now, value stocks are basically getting more for what you paid for, obviously. But in this case, you are actually evaluating a company. You're not really worrying about the share price right now. You're just worrying about the worth of the company. Is it undervalued? Is it overvalued? And if it's undervalued, I need to invest in this right now. So usually when you want to think of a value investing, you want to think of Warren Buffett. Warren Buffett, if he ever thinks of investing in a company, he's going to read the value, he's going to read the earnings statements, he's going to read the financial statements, he's going to read the cash flow, he's going to read if the company is actually moving up and if it plans on moving up for years to come. So with that said, yes, you're worried about the share price, but when it comes to worrying about the share price in value stocks, you're worried if it's too low or too high considering of its worth. What do I mean? When you come to find out that the company is worth $45 a share when it should be worth $70 a share, that's when you realize, okay, it's undervalued, I should strike on this now. That's what I need to do. So value stocks, you just hammer it down when it comes to earnings statements, financial statements, and cash flows. And they can easily be found in different types of websites like Bloomberg or Google. Just try to make sure your sources are reliable. And when it comes to evaluating a company, you just want to make sure you have all things correct. So that way when you come to your solution or your final conclusion, you know that you have a reliable source to back up on. So that's value stocks, trying to find out if a company is undervalued or overvalued, and then buying the stock and holding it until it's reached its worth. And then at that point, you can either sell or hold even more. So with that said, we're going to move on to growth stocks. Now, these stocks are companies with potential growth, obviously. That's why they're called growth stocks. But these have sales and earnings and a market share that have grown a lot faster than the overall economy. So with that said, growth stocks are a lot riskier than blue chip stocks, but at the end of the day, you can be rewarded with a higher return, which is the reason why a lot of people usually go with growth stocks with the hope of a higher return over a period of time. So instead of spreading the company's dividends through shareholders, they actually just reinvest their earnings into the company so that way they can have more money to work with and more ways to grow the company, in essence growing the share price. So if you plan on investing into growth stocks, don't plan on getting a dividend. So that's one thing. A possibility of a high return with a low possibility of a dividend at the end of the quarter. So you might be wondering, how could I get a grasp or find these kinds of stocks? There's actually a list called the Nifty 50, and it's a list of corporations poised for significant growth. Now, not all the stocks in this list might be like a shoo-in, as you say, but at the end of the day, if, for example, in 2008, the Nifty 50 list actually consisted of its top picks of Coca-Cola, Microsoft, and Walt Disney, and plenty more, but it had these three on the list, and over a 5-period time, Coca-Cola has increased 25%. Walt Disney over 5 years, 69%. Microsoft over 5 years, 218%. So, yeah, you might not be able to find the next Microsoft, but at the end of the day, if you find the next Coca-Cola, you're going to be up 25% of your money. So this is another buy and hold investment strategy that we're going to talk about. So the next stock I want to talk to you guys about is the income stock. Now, when it comes to investing in an income stock, usually investors are looking for a steady stream of income. Now, how can they do that with dividends? Dividends are what steady stream investors are looking for. Why? Because they're reliable. They're probably the steadiest stream of income you can get out of the stock market. Now, what are dividends? Dividends are caused by healthy earnings that the company ends up spreading throughout the shareholders. Now, a company can either give out dividends or just reinvest into the company. Now, a good example of dividend stocks are Johnson & Johnson, you've got Target, you got Barnes & Nobles, you got General Electric. Usually how it works is you have the share price of a company, and down below, the dividend is a percentage that you get depending on how many shares the company you have. So let's say Target is at $70 and their dividend is 3.3%. So you get 3.3% of $70 depending on how many shares you have. So that's how dividends work. Now, usually, depending on how much money you have, people live off their dividends because it's such a steady stream. You get paid either quarterly or annually, so you're basically getting a big fat check at the end of 3 months. So I truly recommend everyone having at least one dividend stock or something relatively close to a dividend stock in their portfolio, because it's always going to be something that's going to be coming into the portfolio. It's always going to be that extra paycheck at the end of 3 months. So if you're just starting or you've been investing and you don't have this yet, I mean, it's basically a steady stream in the stock market. Stock market can go up, down, sideways, who knows, but dividends will always be there unless something terrible happens in the company, which, that might happen too, but it's less likely than the whole market to crash, So I truly recommend having dividends in your portfolio, and you can easily just look up a stock and they have the category right there, how much percentage do you get off the dividend. So I recommend, looking up, Coca-Cola, Target, General Electric, Barnes & Nobles has a 7% dividend right now, so that's a really good thing to look at. So that's going to be it for this episode. Let me know if you truly enjoyed it by letting me know in the comments. Let me know if you want me to go into anything else that you just really want to know about or just have questions about, unsure of. If you truly like this video, learned something new, or just all of this was just something unheard of to you and you just really appreciated the knowledge, just like, share, subscribe. I'm going to be posting a lot more. I'm going to be posting part 2 next. So from there on in, I'm just going to be leaving you with this, and hopefully you enjoyed it. I hope you have a great day. Keep hustling. I'm praying for you guys. Have a great day.